Hi friends, welcome to SNCA Study Club, a platform for CA final students. Identifying and assessing the risk of material misstatement through understanding the entity and its environment. So, the risk, before taking this or before detailing explaining this, we have to understand one thing. Where there is more risk, there will be more audit. That is where the risk is increasing, and according to that the auditor required to apply audit procedure. Why the auditor is applying audit procedure? To obtain audit evidence. Why they have to obtain audit evidence? To arrive at a conclusion. Why conclusion? To express an opinion, right? So where the risk is more, the auditor have to perform more audit procedure. So first of all we are classifying this risk: business risk, fraud risk, sampling risk, non-sampling risk. Business and fraud risk, when it will combine, it will deemed or it is treated as what? Inherent risk. Then control risk. Inherent risk and as well as control risk becomes what? If it will be combined, then it will become risk of material misstatement in financial statement. Where sampling risk and non-sampling risk is combined, it become what? Detection risk. When risk of material misstatement and detection risk is combined, it become what? Audit risk, right? It will become audit risk. First of all, what is mean by the business risk? Business risk means the circumstances where the auditor where the entity fails to attain the objective. That is, we know that if several entity or that is a different organization has different objectives, different plans, they are functioning so as to achieve these plans. So where this business risk exists, they fail to attain that objectives. That is circumstances that is adversely affect the entity in achieving the objectives. This is what? Business risk. Circumstances that is adversely affecting the entity in achieving the objectives. Then what is mean by fraud risk? What is mean by fraud? Intentional error. It is not unintentional, it is intentional. We have already discussed SA 240. What are the audit procedure that is required to be performed by the auditor for the purpose of determining fraud in the financial statement. Actually, it is the responsibility of the management to prepare a financial statement that is free from the risk of material misstatement due to fraud and as well as error. Then fraud risk means people intentionally deceiving the entity. So the risk that is arising because of the intentional errors which has been done by the people with the entity. So these risk which has been done intentionally to deceive the entity, or the any things that has been intentionally done to deceive the entity, this is known as what? Fraud risk. Where there exists fraud, it will automatically create a risk to the entity. The fraud is mainly for the purpose of taking illegal advantages, unjust objectives, etc. It can be done by the employees, officers, management, TCWG, competitors. That is, it can be within the organization or outside the organization. Then sampling risk. Already have explained sampling risk. I think it is in question number 4, right? Which is stating that conclusion which has been obtained from the sample is different from the conclusion from the population. That is, this is population and this is sample. Auditor is applying same audit procedures to the sample and as well as to the population, both giving different conclusion. This is known as what? Sampling risk. Sampling risk means conclusion which is obtained from the sample is entirely different from the population conclusion. Okay. Then non-sampling risk. What is mean by this non-sampling risk? Non-sampling risk means auditor is required to perform audit procedure. We know that mainly for obtaining the audit evidence. That is, auditor perform audit procedure to obtain audit evidence. But the audit procedure which has been performed by the auditor is what? Inappropriate. That is, non-sampling risk means the chances where the audit procedure which has been performed by the auditor to obtain audit evidence is inappropriate. Actually, whatever the procedure which has been performed by the auditor to obtain evidence is not giving the actual evidence, that was the sufficient and appropriate audit evidence, which is stating that the method which has been applied by the auditor is what? Inappropriate. Okay, so non-sampling risk means the chances were the audit procedure what? Inappropriate. Then inherent risk and control risk. What is mean by inherent risk? What is mean by control risk? Inherent risk means some organization or some entity may not have what? Internal control system. So inherent risk are arising because of the circumstances which is happening in some entity where there is not exist an internal control system. So because of lack of internal control system, that is there is happening risk of material misstatement in the account balance and class of transaction. Whatever the accounts or whatever the transaction that has been provided in the books of accounts of the company is providing wrong information which has been already materially misstated. They are not intentionally omitting some entries, or they are entering fake entries or entries without authorization. So circumstances that is creating a risk, that is because of non-operation of internal control system or non-existence of internal control system. That is circumstances where not exist internal control system in an entity that lead to material misstatement in the account balance and class of transaction. Okay, then control risk. Actually here we explain a textile where there is no security and someone is making the source stealing the dress clothes and ready-made garments, etc. But another organization or another textile, there is have what? A security, full-fledged security. Okay, but even if having that security, people is stealing that textile garments. So which is stating that entity is having internal control, but it is not operating it is not operating efficiently and effectively. That is, these control risk is mainly because of what? Lack of operation, or the existing internal control system is not operating efficiently and effectively. That is, existing internal control system of an entity is not able to prevent, detect and correct the risk of material misstatement. Internal control system is getting info, or if they operate internal control system, they can identify the risk of material misstatement, but the existing internal control system is not able to prevent, detect and correct the risk of material misstatement. That is create what? Control risk. So when this inherent risk and control risk combined, it is known as what? Risk of material misstatement. That is, not having control, that's the risk of material misstatement. Even having control, because of its non-operation, risk of material misstatement is existing. So what is mean by the risk of material misstatement? Circumstances, account balance, class of transactions and disclosure which has been materially misstated. That is, we are examining this account balance for the purpose of getting the closing figure, or to determine whether it has been correctly stated, etc. So whatever that has been provided in the accounts, or whatever which has been provided in the journal, that is with respect of the transaction, it is completely wrong because of lack of operation of internal control system, or there exists internal control system, it is not functioning efficiently and effectively. This is known as what? Risk of material misstatement, where account balance, class of transaction, disclosure which has been made by the entity is affected due to risk of material misstatement. Okay, then sampling and non-sampling, that we have already discussed. Detection risk. It is the primary responsibility of the management to prevent, detect and correct the risk of material misstatement. But at the same time, auditor is also required to determine whether there exists any risk of material misstatement. Suppose if the audit procedure which has been performed by the auditor was not able to detect the risk of material statement, detect the risk of material misstatement, this is known as what? Detection risk. That is, chance of risk of material misstatement where it is not detected by the auditor. That is, auditor was unable to detect the risk of material misstatement by performing the audit procedure. So the last one is the audit risk. Risk of material misstatement plus what? Detection risk. This is known as what? Audit risk, which is stating that chances where the opinion which has been provided by the auditor is wrong. That is, chances of opinion which has been given by the auditor is inappropriate. Actually, he was issued what? Unmodified opinion, but where modification was required. Actually, the financial statements were not free from risk of material misstatement, but auditor was not able to detect this risk of material misstatement, and he has issued what? Unmodified audit report. So where that is audit risk means auditor is giving an opinion that is inappropriate. The risk or chances that is giving a wrong opinion by the auditor, that is actually auditor was supposed to give what? Modified opinion, but because of his inability to identify this risk of material misstatement or to detect this risk of material misstatement, he is providing what? Unmodified opinion. So this is what? Risk. So we have already discussed that there is a direct relationship between the risk and as well as audit. Where the risk is increased, the audit procedure have to be increased, that is auditor have to apply more audit procedure. Then business risk means this is the circumstance where the business or entity is not in a position to attain the objective. Fraud risk means the risk which has been existing in an organization to deceive the entity. Okay, then inherent risk, both are combined. Inherent risk because of non-existence of internal control system. Control risk, controlling, that is internal control is in existence but it is not operating efficiently and effectively. Sampling risk, conclusion from the sample is different from the conclusion of the population. Non-sampling means what? Audit procedure is inappropriate. Detection risk means audit procedure not able to detect the risk of material misstatement. Audit risk means what? Auditor is giving wrong opinion, that is inappropriate opinion. Risk of material misstatement means because of non-existence of an internal control system or existence of an inefficient internal control system. Risk of material misstatement in the account balance, class of transaction, and what? Disclosures. Okay, so we just understand what? The risk, the different types of risk. Now we are moving towards essay 315, that is identifying and assessing the risk of material misstatement. Okay, so the essay's name itself stating that what? Identifying and assessing the risk of material misstatement by understanding the entity and its environment. So here auditor have to understand what? Risk of material misstatement. How can auditor understand with respect of this? By understanding the entity and as well as the environment. So I have here, it has been stated that auditor should identify the risk of material misstatement by understanding the entity and as well as the environment. So for getting an understanding with respect of the entity and environment, auditor have to perform what? Audit procedure. So this audit procedure is mainly for the purpose of understanding or determining whether there exists a risk of material misstatement. So we can state it as what? Risk assessment procedure. That is auditor have to, in this case engagement partner have to perform what? Risk assessment procedure. That is engagement rap song. Okay, so rap song, it means that engagement partner should perform risk assessment procedure so as to determine the existence of risk of material misstatement. So how can, or some examples of this risk assessment procedure I have already explained here. So it include all those procedure which has been performed by an auditor to obtain what? Audit evidence, right? So it include all those procedure which has been performed by the auditor to obtain what? Audit evidence. So I have made a mnemonic to understand with respect of that. That is made IPC. That is the engagement partner made what? Indian Penal Code. Okay, IPC mainly for the purpose of risk assessment procedure or to identify the risk. This is the code which is stating that engagement partner has prepared or made IPC, Indian Penal Code, to identify risk of material misstatement, that is which is known as what? Risk assessment procedure. So examples: M means management. Auditor can communicate or inquire with the management and TCWG. So this is first method, or this is an example of audit procedure or RAP. Then what? A means analytical procedure. We will take essay with respect of the analytical procedure. Okay, analytical procedure means obtaining audit evidence by comparing the financial information with the non-financial, that is trend analysis or what? Ratio analysis. These are some examples of analytical procedure, or inter-firm comparison, intra-firm comparison, etc. Then what? D is an important part. Sorry friends. D is an important part which is stating that discussion, that is engagement partner may make discussion with the team member, right? There will be a partner and as well as the whole team member with respect of important matters. So engagement partner may, after making some discussion, they may also identify what the risk, that is risk of material misstatement. Then what? E. What is mean by E? Other engagement with the entity. Suppose if the same engagement partner has undertaken management consultancy services with respect of that entity or some projection, etc. So that also provides some information to the concerned person. That is, with that engagement they can gain some information with respect of the entity and its environment. So it may use their experience with the entity with respect of any other engagement. Okay. Then what? I. I means inspection. Inspection means witnessing, etc. Okay. They can inspect the documents, they can inspect the records, they can inspect what all the procedures, etc. Okay. Then what? P. P means previous experience. Suppose if the same engagement partner was appointed in the previous year so as to perform the same function, they may obtain what? The experience from that entity. They may understand more about the entity and its and their environment. So in the for the purpose of assessing the risk of material misstatement by understanding the entity and its environment, they can also use what? Previous experience. Then last, C. Information which has been obtained by determining the client acceptance and continuous. Suppose the client is engaged in some illegal business, or they are not complying with the laws and regulation, or they are not making the payment of undisputed audit fee, or they are putting some limitations on the scope of audit. These are what? Or these are creating what? Limitations to the auditor. That is, auditor before accepting they are know that, or they are getting understanding with respect of the entity and environment. So information which has been obtained through client acceptance and continuance can be also used for the purpose of understanding the entity and as well as the environment. So which is the mnemonic? Made IPC, that is engagement partner has made IPC, that is Indian Penal Code, for the purpose of obtaining risk of material misstatement, that is as RAP. That is engagement partner made IPC as what? RAP. M means what is mean by this? M, inquiry with the management, analytical procedure, discussion. Then what? Other engagement with the entity, that is other engagement experience. I, inspection. P means previous experience. C means information which has been obtained through client acceptance and continuance of the client. Okay, we are moving towards the next part. So here engagement, I have already discussed that engagement partner and key engagement team member should discuss with respect to the susceptibility of the financial statement to risk of material misstatement and application of applicable financial reporting framework. AFRF means applicable financial reporting framework, which is stating that engagement partner and the key members or the team members have to make a discussion, that is whether there exists any chance because of the financial statement is misstated, that is financial statement is subject to some risk of material misstatement, or whether these financial statements are prepared on applicable financial reporting framework. So there should be a discussion with by the engagement partner and as well as the team member with respect of this also. Moving towards the next part. I hope you have cleared or you have understand with respect of these matters. Okay. So here I have provided some mnemonic to understand Essay 315. That is Essay 315 also include what? Understanding the entity and its environment. So while we are reading the question, we may, or while we are reading the concept, we may think that we can recall each points, or we can write in the exam properly. But actually what is happening in the exam hall, we may not able to recall all these points. At the same time, we may repeating the same point in different way. So as to avoid this, I prefer to use mnemonic. Okay, but few students I don't know, and I am not disagreeing with them, but few students may not like this kind of memory techniques and as well as mnemonic. I am not against it. I am providing this only for those students or only for those friends who prefer to use this. Okay, so I have used mnemonic. If you don't interested, or if you are not interested with respect of this, ignore it. Okay, so I will explain the mnemonic, along with I will explain what is mean by this understanding the entity and as well as the environment. There is nothing complicated. I have used it only for the purpose of recall the points. Okay, so understanding the entity and its environment, mainly for what? to determine whether there exists any risk of material misstatement. So the mnemonic is number one IT solution is SAP. Okay, suppose this is what number one. Okay, I think there is some lighting issue here. So it is what number one. Okay, I hope you have identified this is number one. Okay, so there is number one IT solution, that is SAP, which is developed by SRO Refi. That is, SRO means we know that WRO, NRO. So just like that, that is don't. Okay, I hope you identified what is mean by, or you get what is mean by SRO. SRO Refi, that is student registration number. Okay, SRO, that is Southern Regional Council's this is the number which has been allotted to him, who is what? Refi. Refi is a student, that is CA student. His SRO, that is registration number, is what? SRO. So SRO Refi has developed SAP, which is the number one IT solution. So now I am going to determine or explain what is mean by this understanding the entity and its environment. Understanding the entity and environment include obtaining a whole understanding with respect of the entity, so as to determine whether it is performing efficiently and effectively in whole aspect. So NO means nature of operation. Operation means what? The different activities that has been undertaken in the organization. So auditor have to understand, or auditor should have a basic understanding with respect to the operation which has been undertaken in the entity and the nature of that operation. Then nature of ownership. Nature of what? Ownership. Who is the real owner, etc. Then IT. IT you have to make a reverse order. TI. TI means types of investment. Different types of investment which has been made in the entity, or which has been made by the entity. Okay, that is, it can be to enable the auditor to understand the classes of transaction, account balance and disclosure. Then, so these types of investment facilitate the auditor to make plans with respect of what? Including investment special purpose entity. That is, we know that there have what? Special purpose entity. So understanding these types of investment, auditor may get a proper understanding with respect of the account balance regarding the investment, and also they can make appropriate plans with respect of this. Okay, then what? SAP. SAP means note SAM. SAM, Hindi mein SAP means what? Snake. That's note that SAP. Okay, SAP means what? I have already told that this is a software. There is a software, IT software. So here selection and application of accounting policy. Okay, so auditor have to determine, that is the engagement partner have to determine whether they have selected appropriate accounting policy and whether it has been properly applied. Then SRO. SRO, here S and O means strategy and objective. SRO. S means strategy, O means objectives. So there should be proper strategies and objectives to tackle what? Risk. Risk means here what? Business risk. Auditor should understand what are the main strategy which has been adopted by the entity for what? Attaining the objectives. Then auditor should understand what are the main objectives of the entity. Then determine whether there exists any business risk. Refi. Refi means REFI. R means what? Regulatory requirements. Whether it has been complied with the regulation that has been specifically or generally applicable. Okay, regulatory requirements. E means what? External factors, that is status of competitors, etc. So auditor or the engagement partner have to determine which are the external factors that can impact the entity and its environment. Then applicable financial reporting framework to the entity, that is whether there is having any specific special purpose framework that is applicable to the entity, or which is the applicable financial reporting framework, and the entity has been prepared financial reporting financial statement as per the applicable financial reporting framework, plus financial performance. Financial performance. It also include determining what? Types of finance, that is entities organizational structure and what? Structure plus how it is financed. How it is financed. Then last one, I means industrial requirements or industrial matters which is relevant to the entity. So here I have provided some notes or some points through which you can elaborate essay 350, which is understanding the entity and in the environment of the entity. Auditor should obtain an understanding with respect of the following so as to determine whether there exists any risk of material misstatement in the entity by understanding the entity and the environment. So nature of operation, nature of ownership, then types of investment, selection and application of accounting policy, then strategies of the entity, then business risk, then what objectives of the entity, regulatory requirements, external factors that is affecting the entity, applicable financial reporting framework, industrial matters, and applicable financial reporting framework also include financial performance of the entity and how it has been financed and organizational structure. Moving towards the next portion, I have already explained. Those who interested in the mnemonic can use it, otherwise ignore it. Okay. So here we are explaining that auditor should understand what the internal control system, because auditor is also required to determine whether there exists any risk of material misstatement. So auditor should understand internal control system which is relevant to the audit. So internal control system, this is mainly for the purpose of determining or what safeguarding the asset, preparation of financial statement as per the financial reporting framework, consistent application of accounting policy, etc. and what maintenance of documents record. These are all covered by with respect of the internal control. So here we have to understand what are the elements of internal control of an organization. I have explained here the components of internal control system: control environment, risk assessment procedure, control activities, monitoring and control, information technology. So these are the main components of an internal control system. We are point by point explaining this. Okay. So first of all, control environment. Control environment means auditor should determine whether there exists a culture of honesty and ethical behavior. That is whether the management or the TCWG has communicated to everyone, that is it can be operational level employees or what middle level management, etc., with respect of the ethical values, and whether there exists honesty and ethical behavior, plus whether the management of the organization is enforcing the integrity and ethical values. So auditor should examine whether there exists what an atmosphere or a culture of honesty and ethical behavior, whether there enforce what the ethical policies and what integrity. Then auditor should examine those charged with the governance. That is, if the auditor is examining the internal control system, especially the control environment, those charged with the governance have what an important role. So auditor should determine independence. First one, independence. That is, check whether the TCWG is independent from the management. Independent from whom? From management. Then what? Information that has been obtained by the TCWG, that is which are the information that has been provided by the management to TCWG, which are the process which has been undertaken or the process that has been undertaken by TCWG on receipt of such information. Then extent of involvement, right? That is whether they are involving in the organizational activities, and if involving to what extent. So this helps to determine whether what is the role of TCWG in the internal control system of an organization. Then interaction, extent of what? Interaction. That is whether they are properly interacting with the management and what the employees, and as well as what the matters which is internal to the organization and as well as external to the organization. Then what? Scrutiny. Whether TCWG of the organization is making appropriate scrutiny of the activities which has been undertaken by the employees and as well as management, policies and decision that has been taken by the management. So whether there exists scrutiny and appropriate communication in between what TCWG and as well as the management. Then next, what? Auditor should understand the management of an organization. That is business risk. Business risk. how management of an organization, or what are the approaches that has been adopted by the management towards the business risk. Then information processing, attitude of the management towards information processing, or the method that has been used by the management towards information processing. Then last one, what? Attitude towards financial reporting, that is whether the financial reporting has been prepared as per the financial reporting framework, whether there exist any changes, if there exist any changes, whether it has been appropriately disclosed by the management. These are also have to be determined by the auditor. Then what? Human resource policy. What is the human resource policy that is existing in the entity? That is whether they are making the appropriate selection, appropriate recruitment of the employees, that is right person on the right job is existing in the concerned organization. Then communication of ethical values and policies, that is the entity, that is the organizational policy, that is whether there exists a proper communication with respect of the ethical values and policy within that organization. So control environment mainly include what? Determining or the culture of what? Honesty, ethical behavior, whether they are enforcing these ethical policies, and as well as what? Integrity. Then TCWG, extent of involvement of what? Our TCWG, and then independence of TCWG, what are the information that is available to the TCWG, extent of interaction of the TCWG, whether they are making appropriate scrutiny of the informations or the policies that has been taken by the management. Management means what is the approaches that has been used by the management towards business risk, what is the attitude towards information processing and as well as financial reporting framework. Then human resource policy have to be evaluated. Then they should determine whether there exists a proper communication with respect of the ethical values and as well as policies. Okay, so this is what? Control environment. So the next component of an internal control system is what? Risk assessment process, that is entity should have what? Risk assessment procedure or risk assessment process. So auditor should check risk assessment procedures of the entity and determine whether the entity is having risk assessment procedure. Entity may have, so determine. Actually, auditor have obtained understanding that entity is having risk assessment procedure. Then check whether there exists any business risk with respect of the entity. If such risk is existing, auditor is required to determine why entity's risk assessment procedure failed to identify the risk and respond towards that. It means that auditor first of all have to check whether there exists a risk assessment procedure in the entity. Auditor has identified that there is existing a risk assessment procedure. Then auditor determine whether there exists a business risk. In case, that is, even after having appropriate risk assessment procedure, entity is having some business risk, auditor should determine why the risk assessment procedures of the entity failed to identify that risk and why the management doesn't respond towards that. That is then suppose if the entity is not having a risk assessment procedure, then auditors also have to determine whether there exists a business risk. Then communicate with the management and determine whether the entity is able to attain its objectives, or determine whether the circumstances, that is auditor have to identify the existing circumstances and determine whether it is appropriate not to have a risk assessment procedures in these situations or in these circumstances. Normally entity should have a risk assessment procedure. If no, auditor have to determine whether the circumstances of the entity, that is compare the circumstances and the situations and determine whether it is required to have RAP or not. That is, auditor should determine whether it is appropriate to not to have risk assessment procedure with the existing conditions of the entity. Okay, then auditor have to check whether the entity is having what? Risk assessment procedure, and if yes, auditor should check whether it is operating efficiently and effectively, because a good internal control system should have what? Risk assessment procedure. That is how management should assess and as well as respond to the risk that is existing in the entity. Then determine whether there exists any business risk. If existing, whether it is significant or not, auditor should determine. And if whether the risk assessment procedure that is existing in the entity identified that business risk. If yes, which are the action that is required to be done and whether the management has responded to that business risk appropriately. Then determine whether it is significant or not. That is whether the business risk is material to the financial statement or not. Auditor should examine the same. Then determine if suppose there is no business risk, determine the likelihood of its occurrence, whether there is a chance of happening of what? Business risk. So should, that is an internal control system should have what? Risk assessment procedure, that is entity should be able to understand the risk and entity should be in a position to respond appropriately to the identified risk. Then auditor is also required to determine whether there exists a business risk and whether there exists what? Risk assessment procedure. That is, if auditor founds business risk which remain unresolved, auditor has to determine why the risk assessment procedure become weak or doesn't respond towards that risk. What are the reasons? Then if suppose if the entity is not having risk assessment procedure, auditor should ask the management and determine which are the existing conditions and whether it is appropriate not to having a risk assessment procedure in these conditions, etc. Now we are moving towards the next element. Okay. Yes, here we are continuing with our essay 315. We have completed 2 parts, right? Control, environment, and as well as risk assessment procedures. The next component of an internal control system is what? Control activities. That is, if an auditor, that is an engagement partner, have to obtain informations or adequate knowledge with respect of the entity and its environment, it has to obtain what? They have to obtain what? Information about the internal control system. So control activities. Auditor should obtain an understanding of the control activities that is existing in that organization. So control activities related to significant class of transactions. We know that which are the significant transactions of an organization, right? Then account balance. Whether what are the control activities with respect to what? Account balance that is existing in that organization. Then control activities related to disclosure. So auditor have to ensure that the financial statement has been prepared which is free from the risk of material misstatement. So as to ensure that the financial statement, whether the financial statement is free or not, free from the risk of material misstatement, they should obtain an understanding with respect of the control activities of the transactions, account balance and disclosure in the financial statement, right? Then it has to be what? Significant. It is not required to obtain understanding with respect of all control activities in each and every component of the financial statement. They have to obtain understanding with respect of significant class of transaction, significant account balance, significant disclosure. Okay. Then auditor should obtain understanding of paisa. That is, auditor can obtain this understanding with respect of the control activities if they obtain understanding with respect of the paisa. Paisa means what? Whether there exists appropriate physical control. Physical control, P, right? It means that physical control is mainly required for what? For the tangible assets. Like it is also required for the fixed asset and as well as stock, etc. So auditor have to determine whether there exists proper physical control in that organization. Then P, one more thing with P, that is what? Performance review. Whether appropriate authority is making review of the performance in that organization so that they can understand what? Whether there exists any deficiency in the performance, what are the shortcomings of that performance, etc. Okay. Then authorization. Organizational activities. We know that different types of operations in an organization, different types of transactions in an organization, agreement that is entered into between organization. So for all these activities there should be what? Appropriate authorization. Without, if that activities has been undertaken without the proper authorization, it may create what? Risk in that organization. So auditor should determine whether all the activities, operations, agreements or agreements has been undertaken with appropriate authority or whether appropriate authorization has been obtained or not. Then what? I, that is information processing. Whether they have processed the adequate information, whether they filter the important information or what? Important facts, important data, etc. So whether there exists what? Information processing in that organization. Then S means segregation. Suppose this is a cake. They have 4 children. The cake has been distributed. That is the cake given by the father to the children and told them that you should eat it. Only he ate it. The other 3 didn't get it. It means that the father has not provided instruction with respect of the method or the way in which they have to eat it or they have to distribute it. So in an organization there should exist what? Proper segregation. It can be duties, it can be what? It can be authority, etc. So there should exist what? Proper segregation. So auditor have to determine whether there exists paisa. That is control activities. Control activities include auditors. It means that auditor is obtaining an understanding with respect of the control activities with respect of the significant class of transaction, account balance and disclosure. So the auditor should determine the different operations or understanding with respect of paisa, related to the paisa. That is whether they have appropriate physical control, whether the appropriate authority is making the performance evaluation and review, then what whether there is a appropriate authorization to the class of transactions and functions in the organization, whether information has been processed, whether the functions has been appropriately segregated among the organizational people. So these are involved in what? Control activities. Then next component of internal control system is what? Monitoring. Auditor. We know that auditor should understand what? Activities which has been undertaken by the entity to monitor the internal control system. It is the responsibility of the management or of the management of that entity to make appropriate monitoring of the internal control system. So auditor have to determine what are the activities that has been taken by the management to monitor it. It means that suppose this is the management, this is the internal control system. Management is responsible to monitor the internal control system. Auditor have to understand what? The activities which has been taken by the management to monitor the internal control system. Okay. So which involves what? Whether there exists appropriate supervision. Then so supervision. Then what? Internal audit. Whether that entity has done internal audit. Internal audit is mainly conducting to determine whether the internal affairs has been managed in such a way as per the instructions of the top level authority and in a correct order, right? Then R. R means what? External inspection report. Auditor shall determine whether any inspection has been undertaken by any external authority in the organization. Then last, customer complaint. Whether there exists any customer complaint with respect of the entity. So I have used what? SIRC. S means supervision. I means internal audit. R means external inspection report, and the last one C, customer complaints, right? So these have to be determined by the auditor. So first of all, auditor should obtain an understanding with respect of the control activities and the activities that has been undertaken by the management or by the entity so as to monitor the internal control system. I hope you have understand what I have explained here. Okay, moving towards the next question. So here we are discussing what? The other procedure that is required to be done by the auditor. We have already understand that auditor should understand the entity and as well as its environment, that is internal control system. Then auditor also required to obtain an understanding with respect of the risk that is requiring special consideration. That is, this is the auditor. Auditor should identify the risk that is required but some special consideration. That is, such risk cannot be solved or such risk cannot be avoided with the usual audit with the usual procedures. So while determining such risk, auditor should not consider the impact of the control activities within that organization. That is, to avoid this risk, this is the entity. Okay, the entity may also have what? Control activities, mainly for the purpose of what? Avoiding these kind of risk. So auditor, while understanding this risk, shall not evaluate the effect of the control activities which has been taken by the entity so as to avoid these risks. Did you get it? It means that first of all, auditor should understand the risk, that is requires special consideration. Then, so as to avoid these kind of risk, entity may also have what? Some control activities. That is, entity may use these control activities so as to reduce the impact of this kind of risk. But while understanding, or it means that auditor, while understanding these risks, shall not determine or take into the effect of the control activities which has been undertaken by the entity. Okay, so which are the risks that is required special consideration that we are going to discuss. Okay, here I am used what? Some mnemonic. Those who are not interested don't use, but I will explain it. This is mainly for those who is having some trouble or some problems while remembering or recalling all those elements that they have already studied. Okay, so this is what CFO CSR, that is which are the risks that is required special consideration. These are the risks that is required what? Special consideration. CFO CSR, that is C means risk in the entity, mainly because of changes in legal regulatory environment. Then economic changes. Then changes in government policy. Changes in accounting. Okay, so first C means risk that is happening to the entity, or that is, yes, risk that is happening to the entity mainly because of the changes. Which changes? Such changes can be changes in legal regulatory matters or legal regulatory environment, economic environment changes, government policy is changing, any changes in the method of accounting, etc. So auditor shall determine whether there exists any such risk because of the changes. Then what? F, risk due to fraud. We know that fraud will always provide what? Risk to an entity. So auditor should determine whether there exists any risk because of the fraud. Then O means risk which has been existing in the entity or happening to the entity because of any transaction entered by the entity out of normal course of business. Okay, or unusual transaction. It means that any risk which has been happened to that entity because of entering into certain transaction which is out of the normal course of business or which is unusual in nature. Then what? Again C, complicated transaction. Entity intentionally entering into complicated transaction. This may also create what? Risk to the entity because they are intentionally entering into complicated transaction, right? Then S, subjectivity. Subjectivity in what? Measurement. Subjectivity in measurement of financial information, and that financial information is mainly what? Uncertain, such as estimate, etc. So if there exists any subjectivity in measurement of financial information, this is also create what? Risk to the entity. Then the last one, related party transaction. Related party transaction, that is if an entity is entering into transactions or activities with the related party, it will also create what? Risk. Suppose we are providing to the society our product at a rate of 100, but the same entity is providing that product to the related party at 50 rupee. This is automatically create risk to that entity. So here auditor should understand, or auditor shall obtain an understanding with respect of the risk that is requiring special consideration. While determining that risk, auditor shall not determine or consider the effect of control activities that is existing in that organization. So these are the risks CFO CSR. Any risk because of the changes in legal regulatory environment, economic environment, government policy, method of accounting, etc. Then any risk because of the fraud, any risk because of the transaction which has entered into by the entity and outside of the normal course of business or unusual transaction. Then risk because of the entity is intentionally entering into complicated transaction. Risk because of the subjectivity in measurement of financial information. Then the last one, risk because of related party transactions. Okay, so these are the risks that is requiring special consideration. So here we are moving towards the next part. So we have covered the understanding of internal control system and the risk that is requires special consideration. Now we are covering what? Risk that requires or in where the auditor may determine that substantive procedure is not enough. So it means that which are the risks where the auditor may assume that the substantive procedures may not provide sufficient and appropriate audit evidence. Highly automated processing. We know that nowadays computers, that is automated techniques, are used for the purpose of information collection, classification, processing, storage, etc. So there is no manual intervention or less manual intervention, right? So in that cases, that is where they undertake highly automated processing of transaction with respect of the significant account balance, significant account transaction, disclosure, etc. So if it is more automated and where there is no manual intervention or less intervention, there is a chance where the substantive procedures may not be applicable to determine or to obtain what sufficient and appropriate audit evidence. So here what is doing the auditor? Auditor is determining whether substantive procedure is sufficient to obtain audit evidence or not. So which are the cases where substantive procedure is not adequate? First of all, if the transactions are highly automated. Then what? Controls are automated, that is internal control systems, which are also what? Automated. Controls automated. Once a transaction is authorized, then the similar type of transaction or just like routine transaction will be automatically allowed or authorized. So this will be also create what? Problems. Then it means that the efficiency of these will depends upon the accuracy processing of the system, that is the computer system or the technique or the automated technique that we are using. So if the controls are automated, it is stating that the accuracy of that system or accuracy of the transaction or accuracy of activities that is undertaking through these control will be depends upon the accuracy and processing of the system. Then what? Audit evidence is available only in electronic form. This is also creates some problems while determining or while applying substantive procedures. So auditor may determine in the following cases substantive procedure is not adequate. First of all, highly automated processing, where the transactions or informations are automatically processed, where there is no human intervention, the chances of non-applicability or less appropriateness of substantive procedure will exist. Then what? Controls. Existing control is what? Automated. Once the transaction is authorized, then the similar type of transactions or the routine types of transaction will be automatically authorized. So the accuracy will be depends upon the what? Accuracy of the system. Okay, how the system is operating, the accuracy will be depends upon how the system is operating. Then what? Audit evidence available only in electronic form, that is whatever the audit evidence is available, this is only available in what? Electronic format. So this is also create situations where substantive procedure is not appropriate. Okay, moving towards the next part. Then the last part of this essay. Suppose auditor have to perform what? Audit procedure. Why auditor is performing audit procedure? To obtain audit evidence, right? Audit procedure. Auditor is performing audit procedure for the purpose of obtaining audit evidence. Suppose after obtaining some sort of audit evidence, auditor is continuing the performance of audit procedure and he is getting what? Additional audit evidence. Suppose if the additional audit evidence found to be inconsistent with the already obtained audit evidence, this is the A audit evidence which has been already obtained by the auditor. B audit evidence, this is the additional audit evidence. Suppose there is have any inconsistency in between these A audit evidence and B audit evidence, what should be the action that is to be done by the auditor? Auditor should perform further audit procedure for what? To obtain corroborative audit evidence. So it has been stated, a common point, right? So here we have completed what? Essay 315, auditor's responsibility, that is identifying and assessing the risk of material misstatement by understanding the entity and its environment. So now we are moving towards what? Or we are making a summary of essay 315, okay? So here I have made a summary of essay 315. Essay 315, through which we can easily remember or recall all the elements or all the matter or the statements that we have already here discussed. So this is the summary. Which is the name of the essay? Identifying and assessing the risk of material misstatement by understanding the entity and its environment, right? So essay 315. First of all, auditor. What is the main responsibility of the auditor? Auditor should determine whether there exists any risk. Risk can be business risk, fraud risk, inherent risk, control risk, risk of material misstatement, sampling risk, non-sampling risk, and audit risk. We have already discussed all these aspects in very detail, right? Then the auditor have to perform his own risk assessment procedure. Auditor should perform his own risk assessment procedure, which include what? Inquiry with the management, analytical procedure, discussion with the engagement team, experience with the entity in respect of any other engagement, then inspection, prior experience, matters with respect of acceptance and continuance of the client engagement. These has to be included by when the auditor perform risk assessment procedure. Auditor is performing risk assessment procedure to determine whether there exists any risk of material misstatement or not. Suppose auditor has identified risk of material misstatement in the entity. So, or auditor may understand the risk of material misstatement with respect of the entity and determine whether it is significant or not by understanding the entity and as well as its environment, which include, I have already explained a mnemonic. Number one IT solution which has been developed, number one IT solution is SAP, developed by SRO Refi. No means nature of operation, nature of ownership. IT means type of investment. SAP means selection and application of accounting policy. Then SRO, strategies of the organization, objectives of the organization, and risk which has been faced by the organization. Then Refi. Refi means regulatory requirements, economic or external activities that is affecting the organization. F means financial, that is which is the applicable financial reporting framework, whether the entity is preparing the financial statement as per the financial reporting framework, which is how is their financial performance, how this organization is funded, that is whether it has have what sufficient fund to manage the activities. And the last one, industrial requirements. Then auditor's procedure with respect of essay 350. First of all, wrap. This is the main responsibility plus some additional procedure that is to be performed by the auditor after understanding the entity and as well as its environment. First of all, auditor should evaluate the internal control system, that is to get a 100% picture, or it means a full picture of the entity. Auditor should obtain what? Understanding with respect of the internal control system. So internal control system means what? Or what is the components of the internal control system? Control environment, risk assessment procedure, control activities, monitoring and control information processing. Control environment, we have already discussed all these matters, right? Then control environment mainly include what? The organizational environment, honesty, ethical values, whether they are communicating with respect of that, and TCWG, their powers, whether they are independent, how is their level of interaction, whether they involve in respect of the matters, whether they have adequate powers to make supervision, whether they are expert. Risk assessment procedure include what are the risk assessment procedure that has been developed by the entity, whether they identified any risk. If not identified, even after existing such a risk assessment procedure, determine the reason. We have already discussed with respect of this, okay? Then risk requiring special consideration. Auditor should determine the risk that is requiring special consideration, that is CFO, CSR. change, that is risk due to changes, risk due to fraud, risk due to abnormal transaction, unusual transaction, or transaction which has been entered into by the entity out of the normal course of business, complicated transaction where the subjectivity exists, that is more subjectivity, related party transaction. Then situations where substantive procedure is not appropriate. Auditor should determine which are the situations where the substantive procedure is not appropriate. In that case, auditor have to perform what? Alternate audit procedure. Then if auditor is obtaining any additional audit evidence which is inconsistent with the already obtained audit evidence, auditor shall perform further audit procedure to obtain corroborative audit evidence. This is what essay 315. I will discuss question number 6 after taking essay 330 also, because these question, that is question number 6 of our practice manual is combining, or we have to look that question with respect or by considering what essay 315 and as well as essay 330. So here we completed essay 315, moving towards essay 330. Okay.